You are listening to ChartingWealth.com for Wednesday, the 10th of February, 2016. We always start with the total market as represented by IYY. That's the iShares Dow Jones U.S. Total Market Index Fund, an exchange-traded fund. We can see that we have two down. Well, actually, if you want to count what was a doji back on the 4th of February, we have two down candles since then. On the 8th and then on the 9th, that candle has not finished forming yet. It's a two-day candle. It's only into the first day, and it is a big down candle as reflected on the charts. And what do we see going on? Well, we see that the markets have rolled over yet again, the total market. It tried to boot up on the 4th of February, but just could not do it. Lots of indecision that day looking at the candlestick pattern, and then it rolled over the next day on the 8th, on the next candle on the 8th, broke through the two-day trend line and has continued to move down. Overall in the market today, IYY was down just 0.09%, and we're still in an up pattern on the derivative oscillator, but what we really pay the most attention to is our moving average convergence divergence, which did move over going down back on the 4th and is still in a down pattern. Now it's interesting as we go now to look at the 4-hour chart. What do we see there? Well, down movement in the morning, and then that was backed up. As in going in the opposite direction, where the candle went in the afternoon and the market settled out for the day barely down at all in what we would call a doji. There was more upward pressure that was pushed up by the bears, pulled down by the bears. Then there was down movement pulled down by the bears and pushed up by the bulls. So we have some indecision on the small chart as we ended the day. Derivative oscillator is still in a strong down position, as is the MACD. So we crossed over going down. Hopefully you jumped in sometime on the 5th and have ridden down that momentum at this point. You may be wondering, what should I do now? Well, what should be done at this point is you should be looking at redrawing your trend line, which we will do quickly here. It's a beautiful thing about the software, those of you who are watching. I've just redrawn the two-day trend line, connecting the candles on the 8th and on the 9th together. And when we go back to our 4-hour chart, we're able to take a look. We're still well below that trend line as far as the movement goes. You could, of course, draw a trend line on your 4-hour chart, and decide what you might wish to do there if that trend's broken. But rather than doing that, we typically go by the MACD. The MACD is the big indicator. If we didn't have the MACD, we would, of course, just use trend lines. But the MACD, moving average convergence divergence indicator, is a good one when you have a trending market, not when you have a market that is simply slipping sideways. How many S's could I get in there? Okay, now that's where we are, and we're going to go now back to our two-day chart. We're going to take a look at the S&P 500 as represented by SPY. And while we get ready to do this, guess what we're going to do? We're going to redraw that trend line also. And the beautiful thing about the software that we use from freestockcharts.com, operative word there being free, is that it's so easy and wonderful to use. It's a web-based application. You don't have to download any software. You just log in. And if you have our charting layout, of course, you already know that. If you don't, and you would like the charting layout that we have available that will take you to freestockcharts.com, where you can sign up and use our layout, all you got to do is sign up for our newsletter at chartingwealth.com. You'll get this daily podcast, plus you'll get our weekly review and forecast, plus you'll get the layout that I was just talking about, plus you'll get a link to our 15-minute How to Read a Stock Chart video. And guess how much that'll cost you? Nothing. You ought to give it a try. Okay, now that we've drawn our two-day trend line, we connected two candles, candle on the 8th and the candle on the 9th, And if we go to our 4-hour chart from here, see what the intraday action was, it looks very similar to the total market. Remember, the S&P 500 is, of course, 500 of the big companies. A lot of the volume in the market is reflected there. And we can see 4 down candles since the crossover going down back on the morning of February the 5th. Hopefully, if you were doing a virtual trade, you got in there and you've ridden this down and seen some good returns. Now you got to make up your mind. You're going to take those returns and walk away. You're going to see if the movement in the afternoon was just a digestion point. We don't have a breaking of the 2-day trend line. We don't have a converging yet on the MACD, so we don't have signals telling us it's time to get out. We do have some questions here. If you're happy with the gains that you made, you can, of course, take those. You can take half your position out if you want and let the rest of it ride with the market. It just is all up to you and up to your experience level. You might say, hey, wait a minute, I don't have a lot of experience. That's why you're virtually trading. And that is why you need to do this on a daily basis. Spend 5-10 minutes. It will pay you back scores in dividends in the future potentially, and who knows, millions of dollars maybe. Pay attention. Remember, learn how to read the charts. Don't pay attention to the noise. Derivative oscillators lost a little bit of its speed, but again, confirmed down move on the short chart and a confirmed down move on the big chart as far as the S&P 500 goes. Now let's go to the NASDAQ 100 as represented by the Qs, QQQ, or the cubes. We're going to redraw the trend line on that baby too. What we see is we have 3 down 2-day candles, and we have confirmed down movement. So we will continue to monitor exactly what's going on there, and I've screwed up my line. I'll finish that off later. But when we look at the Qs, we can see that the derivative oscillator has been in a down move on the Qs on the 2-day chart since back in December. And it was great to be able to jump into that move. If we go to our 4-hour chart, we can see that it does look like the Qs has tried its best to bottom out. We have 3 candlesticks on the bottom that have sort of hit a point where the Qs has not moved below for going on 2 days now. And that is about $95.90, so $95.90. Now, if you were able to jump in back on the 4th and rode this baby down, you should be paying particular attention, wondering if it has hit a short-term bottom. Now, remember, we're not paying attention just to the short term, the 4-hour chart. It is in a down move. It has lost speed on the derivative oscillator, and the MACD does appear to be edging closer together. You want to pay particular attention. We do have, of course, a confirmed down move on the big chart, so you need to pay attention to what you can as far as where this is going at this point and make appropriate decisions as to whether or not to get out. On the big chart, derivative oscillators getting further apart, not closer together. The MACD is getting further apart. Derivative oscillators lost speed. So the big chart's telling you to stay in. And what do we like to pay attention to? The big chart more than anything else. So that's what the big chart's saying. Think about that. Again, the reason you're practicing your trades is to start learning how each of these index work based upon the moves that you make. So you can experiment, you can try things, you can do what you think is right based upon the evidence you have in front of you. And I would encourage you to have a trader's notebook. Make notes about what you notice every day. Go back and review those. Learn from your mistakes and learn from your successes. You will learn more from your mistakes than your successes, I can guarantee you. Okay, lastly, we're on the 2-day chart. We're going to go to gold. Gold was down 0.22%, although we still have a strong move up in gold. Still moving up since it crossed over on the 14th, 16th of December. And gold is still above the Bollinger Band as far as the 2-day chart goes. If we revert back to our 4-hour chart and see what's happening intraday, you can see that gold for the last 2 days appears to be topping off on that 4-hour chart. You've had a nice run up in gold. Might be time for you to consider taking some of your profits out, because you've had a nice run up since around the 1st of February. Some good money made somewhere around, oh my word, what are we talking about? Somewhere around 106 to 108, all the way up to 114. Don't get greedy. But maybe you take half of your position out and let the rest of it ride. If you think so, again, strong up movements. We do have some leveling off. It could just be digestion, but you make the call for yourself, realizing that the MACD is converging over the last day, and the derivative oscillator is losing its speed. But again, that's on the short chart. But again, gold is a little different. We like our short chart to tell us what to do. And it crossed over going up back on the 21st and has led us in the right direction so far. So we tried to cross over back on the 1st of February and then boomed back up again, but it is up way at the top right now. So make your own decision, live with it. Maybe you'll take a little profit, maybe you'll take all of it. That is where the charts end for us on the day, as far as the Tuesday of this week, as far as we've continued to jump into February and watch as these markets progress as far as gold goes and degress as far as the indexes go. Hopefully you've been paying attention. You've been making your moves and doing well, realizing that when the market goes down, you can make money in inverse funds. And hopefully you've been doing that on your practice trades, as we might call them. Thank you so much for joining us here at chartingwealth.com. We'd love to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube, all of it. We're here for you. Tell us what you need. We'll try to help. God bless. Take care from chartingwealth.com.